As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICANN member, it'll just take one exam. That's all it takes to complete the globally recognized SEMA professional qualification and the internationally respected CGMA designation. As a SEMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICANN member, you can directly sit for the final exam of the SEMA Professional Qualification, the Strategic Case Study exam. Start studying the SEMA Professional Qualification. Prepare to make an impact.
Good evening from Lagos, Nigeria, to our professional colleagues, student members, and friends of the Institute. And we say welcome to another episode of ICANN on Air, the great platform for learning, powered by our noble institutes, the Institute of Chartered Accountants of Nigeria. I'm your host for today, Tosin Akinwumi, FCA. And I'm glad to inform you that ICANN on Air is back on airing on Thursdays. So we welcome you back to this great episode, of course, after having some episodes on Saturdays. And let me inform you that you should go and tell your colleagues and friends that the show has commenced, and they can be part of this show on ICANN Facebook page, Instagram handle, and ICANN YouTube channel. And today, Thursday, 24th October 2024, what exactly are we discussing? We are discussing bank recapitalization, the role of accountants, and investment opportunities. And I have here with me a distinguished professional, an amiable investment expert, the Group Managing Director and CEO of Cowrie Asset Management Limited, in person of Mr. Johnson Chukwu, FCA. So sit back and relax. Don't go away. We have a lot for you on the show today, and it's going to be very interesting. Don't go away. I'll be right back after this time out.
The Skill Up Artisans Program Super is an initiative of the federal government.
The aim of Super is to upskill Nigerian artisans for better employability.
As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICANN member, it'll just take one exam. That's all it takes to complete the globally recognized SEMA professional qualification and the internationally respected CGMA designation. As a SEMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICANN member, you can directly sit for the final exam of the SEMA Professional Qualification, the Strategic Case Study exam. Start studying the SEMA Professional Qualification. Prepare to make an impact.
Yes, welcome back to ICANN on Air. And today we are discussing bank recapitalization, the role of accountants, and investment opportunities. And I have here with me our guest on the show today, who shall be doing justice on this contemporary topic, Mr. Johnson Chukwu, FCA, the Group Managing Director and CEO of Cowrie Asset Management Limited. Sir, it is a pleasure to have you as a guest on the show today.
Thank you, Tosin, for having me. I thank you. I salute all my professional colleagues and every other person who aspires to be an accountant, even those who are not chartered accountants. You're all welcome to the program.
Thank you very much. Let's quickly take the brief profile of our guest on the show today so that you can actually know that we have an expert in the house today. Mr. Chukwu is initiator or founder of Cowrie Asset Management Limited. Prior to the establishment of Cowrie Asset Management Limited, he has been actively involved in the Nigerian capital market and was instrumental to the establishment of one of the most vibrant capital market operators as the pioneer general manager, CEO of Guardian Express Trust Limited, now Spring Capital, a subsidiary of Guardian Express Bank PLC. Before joining Cowrie Asset Management Limited on a full-time basis in October 2007, Mr. Chukwu was between February 2006 and September 2007 a DGM and Group Executive Operations of Spring Bank PLC. And between December 2000 and January 2006, Mr. Chukwu worked in Guardian Express Bank PLC and supervised at various times such functions as structured corporate finance, treasury, risk management, operations, human capital management, IT, and facilities management. Mr. Chukwu is a BSc holder. He holds an MBA from Lagos Business School, Pan-African University. Among his professional qualifications are fellowship of both ICANN and CITN. Trust me, even the abridged profile of Mr. Chukwu is very long. Even what we call the abridged is a long one because actually he has actually done a lot for himself in this field and most more. But I want to welcome you once again, our viewers across the length and breadth of the country, and even those in diaspora who are already connected with us. Like we usually say, that this program is one that the Institute has actually brought for our members, and even for those who are student members to actually learn and to ensure they are up to date on professional and on other topics. And today we are discussing bank recapitalization, the role of accountants and investment opportunities. So, Mr. Chukwu, let me go straight into the topic for today. Depending on how hot or sick a national economy could be, repositioning it might require some concepts such as recapitalization, restructuring, reconstruction, recalibration, and what have you. And having you as a guest on the show today will certainly afford our viewers the opportunity to learn from your depth of knowledge and experiences. So let's go this way. How sick is the Nigerian economy today in your own assessment?
Once again, thank you, Tosin, and thank you, the audience. That's an interesting question. How sick is the Nigerian economy today? I would say that I will take it from multiple perspectives. One, in terms of general economic performance, the economy is growing at a relatively low growth rate. Of course, we know the economy grew at 3.19% in the second quarter of this year, but that's an improvement from about 2.98% it grew in the first quarter of this year. So in terms of growth, and if you compare the growth of 3.19% that the economy is growing with the population growing at about 2.4%, so there is still some positive growth in the economy, but it's slow. You can actually say it's fragile because it's not far from the population growth rate. And the simple concept is that your economy should be growing at a rate that's far more than the population growth rate, so that you are creating more wealth than is being consumed, or you are creating more productive activity that is being consumed. Secondly, but if you now look at it from a household perspective, where you realize that the inflation rate is at 32.7% for the month of September, that food inflation is at 37.77%, and then that simply means for the average Nigerian household, they are being squeezed because inflation rate is what determines their take-home pay, their ability to consume, their well-being. So because we have seen a high rate of inflation, we have seen erosion in household income in terms of its purchasing power. So a lot of Nigerians are going through some squeeze. So at the household level, we can say the economy is actually at a difficult phase. Then you look at unemployment rates, even with the MBS current basis of measuring unemployment, we also see an uptick. We saw an uptick in inflation, unemployment, and we look at misery index. What is the rate of unemployment? What is the rate of inflation? If you combine both, you talk of the misery index. So for an average Nigerian household, most Nigerian households are going through what they call cost of living crisis. But despite the fact that the economy is still growing at above population growth rate. So in summary, our economy is going through a transition phase that has created some level of discomfort, some level of economic stress on the average households.
Thank you very much, sir. I think cost of living crisis, that's what you mentioned there. I'll come back to it because it's a major thing that Nigerians are facing in this particular economy. But I'll come back on that particular line of thought. But let's still go on to the topic for today, recapitalization. So the word recapitalization seems to create panic amongst many because it gives the impression of impending crisis in the horizon. As a chartered accountant, what exactly is recapitalization and what sector or sectors is it applicable to?
Okay, recapitalization, if we have to define it in a simple language, is the process of injecting additional capital into a business so as to achieve a defined objective. The objective could be that the company is going through liquidity stress, so you inject additional capital so that it will have enough liquidity for trade, for its operational activities. It could be because the company is expanding its operation and therefore it requires additional capital to buy fixed assets as well as its working capital. It can also be that the company is going through a phase, an acquisition, so it's going to a fast growth phase. It's going to what we call inorganic growth. So it's want to buy other companies. So in that case, it requires additional capital. But the concept of recapitalization simply means that you are injecting fresh or additional capital into the capital base of a company. So if it invokes concern, because a lot of people had first heard about recapitalization from companies that are distressed. So in that case, they are saying because they no longer have the liquidity, they're having liquidity challenges. So you're asking them to bring additional capital so that they will overcome the liquidity challenge. But it is not just in case of companies that are difficulties. So there are several instances, like I said, where you have an expansion, so you see new opportunities for growth, and you can't wait to build that capital based on your retained earnings. So you ask your shareholders, or you look for additional shareholders, and you recapitalize the company to take advantage of opportunities that are emerging in that economic space. So people should not just see recapitalization negative. You should also see it as an avenue to attract capital into a company so that the company can actually expand its operational base, which is, I think, what is driving the current recapitalization objective of the federal government. Because the federal government said that the banks were looking at building an economy of $1 trillion, and that the current capital base of the banks will not be enough for them to exploit the opportunity that will be available in the $1 trillion economy. And then the central bank said, go and inject more capital so you have the liquidity and the capital base to meet or take advantage of opportunity that will emerge in the economy as the economy grows into a $1 trillion economy.
Great. That's well answered, I would say, and I'm sure our followers and our viewers are also nodding wherever they are that this is out. But however, after the announcement of bank recapitalization last April, there have been perceived uncertainties that some Nigerian banks might go into liquidation, or depositors might lose their savings, and there might be job losses. Do you think that the fear amongst Nigerians is justified? If yes, why? And if no, what exactly is the reason?
Well, I think just like I said earlier, the impression or the illusion, the false belief that capitalization is for negative purposes, I think I've tried to clear that. So, but speaking specifically to are they those concerns real? The answer is no. The concerns that there could be some banks could go into liquidation because of the capitalization, I don't think it's likely going to materialize. Those concerns will materialize. The simple reasons are this: the recapitalization was not born out of the financial distress of the banking industry. So if it was a financial distress, like I said earlier, there are instances where recapitalization will be based on the fact that the company being recapitalized lacked liquidity, is going through a solvency crisis. So it requires new capital, but that's not what is driving this current recapitalization. I think to a large extent, we can say that the Nigerian financial system is stable, does not have any systemic risk, elevated systemic risk. So the recapitalization today are driven by the expectation of exploiting new opportunities in a growing economy if the economy begins to grow, or when the economy begins to grow. So what will happen is that today, the Secretary of Exchange Commission said that the banks have so far raised about 1.27 trillion naira, those who have come to the market. And we know a lot of them are still coming to the market. What does that tell you? Is that there is confidence among the investing public in the Nigerian banking system, and that's why they are putting in so much money there. But beyond that, a bank can actually decide to belong to a particular category of banking. Belong to a particular category of banking, because the central bank has actually segmented them into about 3 segments. You have the regional banks, whose capital requirement is about $50 billion naira. Then you have the national banks, whose capital base is about 200 billion naira. And then you have the international banks, those have operations outside the country, whose capital requirement is about 500 billion naira. The key thing is that, for instance, if a bank is already a national bank and it cannot capitalize to 200 billion, it can actually decide to surrender its national banking license and go back and into a regional bank. We've seen that in the past. We've seen specific banks like Wema Bank that became a regional bank and went back when it built its capital base and got back its national banking license. So a bank can take that route, so it doesn't need to go into liquidation. A bank can also take the route of merging with other banks. We saw that in the 2004-2006 capitalization process. You can also merge with another bank and remain in operation. But most importantly, the recapitalization is not driven by some level of financial stress. And as long as it's not driven by that, the banks have the leeway to either scale down and become regional operators, or remain national operators, or even those who are international operations sell off their international operation and become national banks. But I think the concerns about banks closing down is far from the reality. In terms of job losses, the economy is still growing. As long as the economy is expanding and growing, there will be opportunities for expansion. Today, what the banks are actually going through is that they are looking for competent people, because we've seen a lot of Nigerian bankers who have jackpot to Canada, to England, to US. So you really have right now a challenge with sustaining a reasonable quality workforce. So the banks are actually going to be looking for more people as they're expanding their business operations. So I think the concerns about losing jobs are far from it. Of course, if you are incompetent, then you can expect to keep your job. But as long as you are competent, the concerns about that there are going to be job losses are not likely going to materialize. I think the banks will rather want to take on more people to take advantage of the opportunity that are going to be created, as long as the economy starts growing.
Okay, the banks will want to take advantage of the opportunities as long as the economy starts growing. Johnson Chukwu 2024. That's an exact quote from you, sir. Okay, so still moving along on the recapitalization. Before the announcement by the Apex Bank, what exactly are the factors that the CBN consider in determining the minimum capital requirements? As the first part of it. And the second one is that how are banks expected to raise or meet the minimum capital requirement?
Okay, I think one of the things the central bank said was the driving force was the prospective growth of the economy to $1 trillion economy. And then the central bank also considered the fact that some banks had extended credits that may have become delinquent, and that the banks need to inject fresh capital into their capital base as to boost their liquidity, boost their solvency, boost their capital adequacy ratio, and give them the war chest to invest further in the economy that will stimulate economic growth. So that's another factor. Of course, the central bank has also segmented and said, look, you don't need to be an international bank. You can actually remain a regional bank and operate within 2 contiguous region plots, the Federal Capital Territory. And then that way, you can actually be a niche market player within your regional, carved out regional zone. So the central bank looked at are there opportunities in the economy? Does the economy have the prospect of growing? Are they need to inject additional liquidity into the banking system? And finally, we've also seen an erosion in the value of the local currency. If you cast your mind back to 2004, 2006, when the capitalization took place, it was targeted at ensuring that national banks had a capital base about $200 million. At that time, the exchange rate was in the region of 180 or so. So the 25 billion naira that was the capital requirement of national banks was about 200 billion naira. So when the central bank also came out and said, look, for national banks, you have about 200 billion naira. If you do the maths, arithmetic, you're going to have something in the equivalent to about $200 million equivalent as at the time that announcement was made last year.
Great, sir. Great, sir. In the past weeks, many Nigerians have expressed dissatisfaction and frustrations due to the poor quality of services they have enjoyed from some banks. As an expert in financial markets and in banking, is the poor quality of services that we have seen in the past few weeks related in any way to the expected bank recapitalization?
No, I don't think so. They are completely there's no nexus of connection between the banking industry recapitalization and the service failures we've seen in the recent past. What had been the fulcrum of the service failures that we've seen in the recent past, we are driven by adoption or transition into new banking application by most of the banks. We've seen some of the major banks transition from one banking application, core banking application to another core banking application. So there's always a hitch, or there are always hitches when you are doing that transition. But because the banks are much bigger now than they were in 2004, 2006, the complexity of migrating what we call a big bang approach, where you just deal, particularly you say you are switching over to a new banking application, is far more complex because there are several additional standalone banking applications that are connected to their core banking application. Take, for instance, your ATM, your POS payment platform. It's maybe a third-party application that is connected to the main banking application. So migrating all the third-party applications to the main banking application, what created those service failures? Because many of the banks have seen the migration from an old banking application to a new banking application. So they now have to migrate all the sub-applications, all the other applications, standalone applications that they have already integrated into their main banking application. They have to now integrate the new banking application, and some of those integrations are seeing failure. Sometimes the interface between the core banking application they migrated to and the other subsidiary application they are using to provide service are not smooth. So I think that's what's driving that, but it has nothing to do with recapitalization.
All right, I have nothing to do with recapitalization. I have a follow-up question on the earlier response you gave regarding the fact that there actually would not be job losses if the economy continue to grow. That's the condition you put on there. Now, sir, let me take your mind, cast your mind back to what happened in 2004. In July 6, 2004, the CBN announced the capitalization of the banking sector from 2 billion to 25 billion with effect from 31st December 2005. And that led to a huge reduction in the number of banks from about 89 banks that we have then to just 24. Some saw that as a witch hunt. And it is now already, with this new proclamation, it's already been permutated that if the current CBN's capitalization directive is complied with, the banks might also, may not also survive, and such that we may eventually not have more than 10 banks after the whole process sails through. What is your professional position about this, sir?
I think the CBN guidelines on the current capitalization had addressed that. In the first place, I did mention earlier that the central bank's recapitalization had categorized the banks into three segments: the regional banks, the national banks, and international banks. The recapitalization of 2004 to 2006 all created a one fell swoop, one size fits all banking system. So all the banks were required to have 25 billion. And like I said, not every bank at that point had the capacity to raise 25 billion from 2 billion naira then. But now a bank can actually decide to stay as a regional player. But beyond that, I do not think that then again, you also remember that at the point when they did that banking consolidation, the banking license was easily freely given. We had some people who were very marginal players in the banking industry among the 89 banks that ab initio you knew they were not doing anything in serious banking. They were not doing any form of intermediation. They were just there trading on FX. So when the capitalization came, it took them by surprise, and many of them fell by the wayside. I think the current environment is far different from that. If the SEC can say that within the past few years, the banks that have come to the market has raised over 1.26 trillion naira. If you spread that 1.26 trillion naira and even use the 200 billion as a basis, you already have more than 6 banks that have fully capitalized. I mean, assuming you just take an average of 200 billion that have capitalized to be national banks. But beyond that, many of the banks have not even come to the market to raise funds. And I also know that there is some ongoing conversation between the central bank and the banks that whatever profit they make in the current financial year, that the central bank will allow them to recognize them as part of their capital. So, and you know, the banks are already making multi-billion naira profit. We had the likes of GT Bank declaring more than 1 trillion naira in profit. We have the UPA declaring more than 600 billion in profit. We have the likes of Zenith Bank, which a lot of the banks are making Fidelity Bank, all of them making very good profit. So if they are allowed to plow those profit back into the system as form of retained earnings and allow them to recapitalize the account as part of their share capital, then automatically with their profit in the current financial year, most of the banks will even achieve the required minimum capital base.
Okay, thank you very much, sir. The last part of your response, I think, has thrown more light, because what we got before now was that CBN would be excluding the retained earnings of the banks and wouldn't not allow the banks to bring this to their capital. But I want to believe that this last comment you have made is a latest information from the CBN. Am I speaking your thoughts, sir?
No, okay. What I said is that there is I know there's an ongoing conversation between the banks and central bank that this year's 2024 profit can be counted as part of the retained earnings, fresh retained earnings that will qualify for as part of the capital. What the central bank said is that retained earnings or historical retained earnings up to last financial year, 2023 financial year, will not qualify as part of a shareholder's fund. So it doesn't count as part of the capital base of the bank. Of course, personally, I had expressed concerns about that. And my position was that if the central bank, as the custodian of the banking system, the supervisor of the banking system, actually felt that there were some components of the retained earning of banks that were of low quality or could be reversed, they would have done some adjustment and excluded that so that genuine or irreversible retained earnings should have counted as part of the share capital of the bank. Because the truth is that if you are prudent, you may have a conservative dividend policy, and therefore you retain most of your profit. If you retain most of your profit and those accounts have been approved by the central bank, automatically that should be part of your capital, because you have taken it out and then brought it back as fresh capital. So that has always been my position. But having said that, the policy as it stands today is that previously historical retained earnings will not count as part of the shareholders' funds. But like I said, the ongoing discussion is still ongoing. It doesn't mean the central bank has approved it. Of course, if and when they do, they will make it public. Exactly.
Thank you very much. Let's take one more question, then we can quickly go around some commercials. Now, let's look at the effect of all this process on Bureau de change. So, as someone with a very deep understanding of the finance and capital market dynamics, within the bank capitalization of 24 months compliance window, which has commenced from April 1st this year and will be ending March 31st, 2026. What improvements do you recommend for the BDCs?
I think for the BDCs, they now need to upscale the quality of their service. They need to upscale their technology, which is what the central bank is also pushing. As you may be aware, the central bank has also come up with a recapitalization requirement for the BDCs. And the central bank now says that for you to have a one-stop, one-office BDC, you need a capital base of about 500 million naira. And if you want to have a national BDC, I think a state BDC is 500 million, and national BDC is about 2 billion naira. What that means is that the BDCs that are fully capitalized are now licensed as national or state BDCs. We now have to deploy a more advanced level of technology so that they can provide services, particularly in the Form A segment, that is in invisible transactions, so that people that are traveling out of the country can actually buy their PT and BTA from them. Home remittances can be done through them. So I think the BDCs have to know that they have to create a niche market that will be specific to them and will not be a direct competition with the banks.
All right. I think that's a very good response. The first part, the last 30 minutes has been so engaging with Mr. Johnson Chukwu, FCA, who has been speaking on the topic, bank recapitalization, the role of accountants and investment opportunities. And let's quickly go and run some commercials. Like we have usually been saying on this program, ICANN on air is affordable. Bring your wares. Let us market for you at affordable rate. This is ICANN. You are members. Certainly, it will not be expensive. So let's quickly go to the market and run some commercials. We'll be right back after this commercial. Don't go away.
Security is key to national development and growth. No nation can be truly economically successful without peace and stability, or when its security is threatened. This is why we must perform our civic obligation of duly paying our taxes so as to provide the needed resources for government to secure our lives and properties. When we pay our taxes, government is provided with the needed resources to equip our security agencies for a safer Nigeria. The money we pay as taxes is used to purchase equipment and hardware, invest in intelligence and other sophisticated technology, as well as cater for the welfare of all security personnel. A secure nation is a prosperous nation. Nigeria is safer when we pay our taxes. FIRS, it pays to pay your tax.
The Skill Up Artisans Program Super is an initiative of the federal government.
The aim of Super is to upskill Nigerian artisans for better employability. This we are carrying out by collecting the data of Nigeria artisans through massive registration, training, certification, and licensing for better job opportunities, both locally and internationally. Super will improve the quality of life of Nigeria artisans. It will improve the quality of work from Nigeria artisans, enhance work and professional ethics from Nigeria artisans, reduce dependency on foreign artisans, and increase foreign exchange through talent export.
Log on to super.itf.gov.ng to register now. Super.
In today's interconnected world, complexity is the new normal, and accountants must navigate this landscape, leveraging interdisciplinary approaches to drive sustainable growth. The Institute of Chartered Accountants of Nigeria, USA District, invites you to our 12th ICANN USA International Accountant Conference. Join us for 4 days of inspiring keynotes, interactive sessions, and expert panel sessions. Date is 26th to 31st of August 2025. Theme: Navigating Complexity, Accountants as Catalyst for Interdisciplinary Solutions. Venue is Windham, Indianapolis Airport Hotel, 2544 Executive Drive, Indianapolis, IN 46241. Join the conversation. Shape the future.
Yes, welcome back to ICANN on Air. Today we are discussing the topic, bank recapitalization, the role of accountants and investment opportunities. And we have in the house an erudite speaker, a senior banker, an investment expert, someone who has knowledge in the finance and the capital market, in person of Mr. Johnson Chukwu, FCA, who is the MD of Kauri Asset Management Limited. And he has been discussing and dissecting this topic along with us. And I can see that our people are already sending in their questions. Please, if you are yet to send questions and you have one, go ahead and pop in your question. Mr. Johnson is on seat to do justice to your question, certainly. Mr. Johnson, once again, you are welcome back to the second half of the show.
Thank you, and we also welcome back. And welcome back our audience.
Thank you very much. I think it's been very interesting. Your responses have been so apt, and I know the young accountants are looking to say, oh, this is a very senior colleague of the Institute, and certainly we are looking up to him as a mentor. So let's go back to where we put a peg on it before the break. So we are still discussing bank recapitalization, the role of accountants, and investment opportunities. So looking at the level of insecurity and the perceived corruption index associated with Nigeria as a country, what is your unbiased opinion on institutional investors who might not be willing to play pivotal roles in providing the requisite post-bank recapitalization capital infusion?
Well, I think, like you said, unbiased opinion. Well, let me start from a very principle that we all have to bear in mind, that capital goes to where it is respected. And what is the respect the capital expects? It is where it will get the highest possible return at the lowest possible risk. Highest possible return at the lowest possible risk. That's what capital goes to. So when you have an elevated security risk, elevated issue of corruption, so naturally, capital will flee from you, which is why we've seen the exit of a lot of foreign direct investment from the economy. So the unbiased opinion is that the government and you and I, as Nigerians, should do everything possible to reduce to the barest minimum the issue of insecurity in the country, to reduce to the barest minimum the issue of corruption in the country, and so as to make our country an desired investment destination. We bought a lot of opportunities, a lot of prospects as a nation, but because of the limiting factors you just mentioned, we are not able to attract the level of capital that we should as a country, and that is part of the challenges we are still underdeveloped. It is not rocket science that the unhygiene factors you just mentioned, issue of insecurity, issue of corruption. Beyond that, you also have other factors like paucity of basic infrastructure, lack of law enforcement or weak legal system. They are part of the mix we have that are constraining capital into the country. But having said that, the Nigerian financial system, particularly the banking system, seems to be what you call a bellwether in the economy today. While other sectors of the economy are complaining of economic squeeze, economic difficulties, you will agree with me that the banks have been declaring massive profits. What does that imply? Is that investors will be considering the banks as, at the minimum, desirable investment outlets, instruments. So I think that's why we've seen about 1.27 trillion naira raised by the banks. So in spite of the fact that we are dealing with insecurity situation, we're dealing with issues of corruption, the banks to some extent have been insulated from the vagaries of the economic pressure the country is going through. To some extent, that's why I say quote and unquote. So while other sectors may find it difficult to attract capital today, the banks are still attracting capital because we are seeing a return on investment, earnings per share in the region of 20-30%. We are seeing dividend yield in the region of 15-20%. And you can't get that from any other sector of the economy. So while other sectors are crying, the banks, I believe, will still attract capital. And I believe not just local investors, we may also see foreign capital coming to the banking industry capitalization.
Thank you very much, sir. Let's also now move to another part, still on recapitalization, but just to drift a little. It is opined in some quarters that the erosion in the value of the naira, the huge investor losses, the ballooning inflation, and the CBN's bank capitalization are already instigating the dollarization of the Nigerian economy. I would like you to give us your own professional position. What will cause, or what could cause a local currency to be ignored in favor of a foreign currency just like the dollar?
Okay, the major thing that drives an economy to be dollarized is if there is a consistent pattern of devaluation of the local currency. And it has happened in countries like Zimbabwe, it has happened in a couple of countries. So where you see a very unstable currency and the currency movement is in one direction, that is moving southwards, then investors will want to protect themselves by migrating their assets or their investments into currencies that are relatively stable, like the dollar. It is not the banking industry capitalization that is driving that. It's because we've seen a consistent depreciation of local currency. In fact, depreciation is actually not the right word to devaluation of local currency in the past couple of years. But particularly in the last 1.5 years, we saw the dollar in May last year, the exchange rate was in the region of, parallel market was in the region of 600 and less than 750 naira to a dollar, 720, 700 to a dollar, the parallel market. And then the official window was in the region of 430 naira to a dollar. By December, exchange at the close of last year, on 29th of December, the official rate was in the region of less than 900, I think 907 naira. 907 naira was the official window, while as the parallel market was about 1,206 naira. That was on 29th of December. Today, we are talking of the region of 1,650 at the official window and over 1,720 naira at the parallel market window. So that consistent pattern of depreciation of the local currency is why people are trying to protect themselves. Like I said, investors or capital goes to where it will suffer the least harm at the lowest possible risk, or it will suffer the least harm and generate the highest possible earning. So people are migrating or dollarizing their investment because of the consistent depreciation of local currency. If the reverse is the case, like we saw momentarily in March this year, when dollar moved from about 1,900 back to about 1,100, people began to liquefy their investment in dollar and wanted to hold naira, believing naira will remain stable. So the duty of the monetary authorities make sure that they are able to supply the market reasonably enough to clear what we may call operational demand that people require to do their businesses. And if we're able to see liquidity flow, dollar inflow into the market to meet basic demands, I think we should achieve stability and people will move away from the need to hold dollar instead of holding naira.
Okay, thank you very much for that response. Okay, so we've been talking about recapitalization in different areas. Now let's move to the part of the opportunities that could abound for professional accountants, even in this recapitalization process. So my question is, what kind of roles and business opportunities are available for professional accountants to grab in recapitalization process?
There are several, Tosin, and for my professional colleagues, they are huge. For those in private practice, that have audit practice, there is what you call reporting accountant report. For a company that the bank is coming to the market to raise money, they are going to do 5-year projection of their earnings, of their profitability, or their profit and loss and balance sheet. That 5-year projection requires an accountant to audit it and present a reporting accountant's report, the accountant's report. That is a huge opportunity for those in private practice. For those that in-house accountants, because the bank's operations are going to be expanding, they will need to put a lot more people into their finance department. And some of the finance people will have to be elevated to the decision-making level, that is C-suite, where you have the CFO that are part of the executive management of the company. So because they will certainly, every bank will require a CFO who is a chartered accountant to be able to advise management on some of the financial decisions they need to take, given the bigger size of the bank. And there will be other functions that require accountants to man. The treasury function always requires people with quantitative skills, particularly accounting background. So in-house, many of the banks are going to recruit a lot more accountants, but beyond that, those are in private practice. We see the opportunities of an expanded audit assignment. So the standard audit assignment will be expanded and require more skills and more heads. And then, like I said, there are also other services, other demands that the banks will come to say, look, you need to come and audit our projections and give us the financial, the reporting accountant report. And that will, there'll be opportunity for us to make money.
Exactly, and that is what we accountants want to hear. Opportunities that will actually make us to hear money. So you have heard it from the horse's mouth about the abundant opportunities that are in this process. So it's not sufficient to say why. Why not tap into these opportunities and for we professional accountants. Now it's time to hear from the audience. The audience are also asking questions from our guests on the show. And I'll be starting with Hamad Jaro. Hamad says, how has recent government policy on bank recapitalization in Nigeria influenced the investment landscape, and what opportunities should investors consider?
We're starting with the fact that the banks, people are scrambling for the banking shares. We've seen in the past 8 months, we've seen most of the banks, the prices of bank shares grow by as much as sometimes 50%, sometimes above 50%. I mean, capital appreciation in the bank shares. So we've seen a lot of shift in the investment pattern of investors, both HNIs, high net worth individuals, retail investors, institutional investors like the PFAs, taking position in banking stocks. And that's also driving up investment on financial other sub-segment of the financial system, like the insurance industry, because people are also believing that as banking stocks are going up, there are opportunities to invest in insurance stock. So we've seen that. So in effect, we've seen more than 32% year-to-date market appreciation in the Nigerian Stock Exchange, and that is driven largely by the recapitalization needs. Consider the fact that fixed income instruments have been on the high side end. Ordinarily, you would have seen a shift from equity investment to fixed income instrument, but because people are now seeing a lot of opportunities, a lot of return opportunities in the financial system sector, investment is flowing into that. So we've seen a shift in investment, even contrary to the most expectation that investment will go to fixed income instruments. We are seeing investment going into equity instruments.
Okay, thank you very much. Let's take Fagola Temichope Adeniyi's question. He's asking, what are the modalities for arriving at the proposed cash ceiling for each of the category of the newly proposed capital base for banks? How does CBN come to the understanding of fixing those ceiling?
Well, because I don't work with CBN, it might be difficult to give a pointed answer. But I can hazard a guess, like I said earlier, when the banking industry capitalization took place in 2004, 2006, the central bank used a benchmark of $200 million as a capital requirement for national banks. And if you look at the time, the central bank, current CBN governor, Cardoso, made that announcement, and if you look at the exchange rate ruling at that point, the 200 billion naira for national banks was equivalent about $200 million as at that time. So I think if you use that at the back of the envelope analysis, one would actually say that the central bank was trying to restore the bank's capital requirement to what it was before naira devaluation.
Okay, thank you very much. And that's a succinct response for Fagbola's question. The last question from the audience for today, because our time is fast spent, and indeed it's an interesting session. Even myself wouldn't want it to close for now. Aderok by Abdul is asking, though I think you have answered this question, but let's still take that question from Aderok by Abdul. He said, to show that CBN meant well on recapitalization, why can't it carry out retained earnings audit for the 25 banks in order to ascertain genuine and unqualified earnings for capitalization and approve it? I remember you mentioned this in the course of the conversation. Do you still want to say something? Do you still want to add some line of thoughts to it, sir?
Well, nothing much to add to what I said, other than to say that I personally had canvassed that position at different fora, and my position is that even there are new banks that started operation that you cannot say that their retained earnings have some components of forbearance, because the insinuation is that the central bank recognized that there are some forbearance in the retained earnings of banks, and therefore it did not want to recognize as part of capital. And I felt if that is the case, all you just need to adjust for those forbearance and then leave the banks with their genuine, undiluted or unadulterated retained earnings, so that to count as part of their capital. And I also felt that for the new banks that have been in operation for 3, 4, 5 years that did not have historical forbearance stories, they should have been allowed to integrate their retained earnings into their capital base. So that I'm of the same opinion with that, and we have canvassed that. But the central bank, in its wisdom, stuck to his gun. But like I said, there's also, I'm aware there's a conversation going on to allow current year's profit to be counted as part of the retained earnings and to qualify as part of the capital base of the banks.
All right, we only hope that that current discussion would see the light of the day, and CBN would approve that for the banks. Okay, so back to the questions here, still on the recapitalization issue, but let's take a drift from capitalization and now come to what we just witnessed just yesterday. You have seen the ministerial changes that were announced by the federal government. And I'll be asking you this question because of your in-depth knowledge of the economy, how you analyze the economy regarding your experience. Sir, what do you think this would do? I mean, the change or the cabinet reshufflement, as it's been called. What do you think this would do for the economy? How would this revamping or the reshufflement of the cabinet change the direction of the economy?
Well, what I will, because I'm not well schooled in politics, I will only restrict myself to those that are occupying economic positions. Of course, two of them that were affected are Dr. Doris Ozoka Aniete, who was moved from Ministry of Trade and Investment to the Minister of State for Finance. I know the lady very well, and I know she's very sound. She has a CFA. She's well qualified, and I believe that all things being equal, as long as they can work harmoniously, I think they will complement them. Say we will complement the Minister of Finance, Mr. Edu, in managing the economy, the fiscal policies of the government, and I believe that will further strengthen that team. As far as Jumoke that was moved to Ministry of Trade and Investment, her past 10 or 15 years of life has been how to improve the investment climate of the country. She has been doing that as the head of the agency that's in charge of improving the country's investment destination. So, and that is basically the fulcrum of the job she will be required to do as a Minister of Trade and Investment. So I personally believe that two of them are competent. The two ladies who are now in the part of the finance, fiscal finance team are very competent and should bring some vibe into the management of the economy. So the others are not people I'm very familiar with, but I think the president needs to do more in terms of the quality of his team. We should have what they call critical mass, where about 60% of the people are extremely competent and have the zeal to drive economic transformation. The country is going through difficult, like I said, household income has been highly depressed, and a lot of Nigerians are kind of going through some level of economic crisis, or what we call cost of living crisis. So a lot has to be done. A lot has to be done in the agricultural sector. A lot has to be done in the manufacturing sector. A lot has to be done in the oil and gas sector. And these sectors are the sectors that will bring some relief to the economy in the short term.
Exactly. Thank you very much. And in closing, ICANN is always open to ideas that will positively advance the growth of our members, the accountancy profession, and the global business environment at large. What is your suggestion to ICANN on continuously filling of knowledge gaps to further build the capacity and create global opportunities for our members?
Well, I think as a member of ICANN, I am quite pleased with the profession. I've been part of those who prepare the MCP and also deliver lectures for the past 20 or 25 years. And I think it is one institution that has been very fastidious when it comes to updating the knowledge base of members, improving the skill set of members. And I think we need to continue to do that. I commend the management, the leadership of ICANN for that consistency, which I am happy to say that several other professional bodies are aping what ICANN say the standards. And if you can, like we say when we're doing ICANN, be a chartered accountant, ICANN.
Wow, it's been an interesting and enlightening session with you, Mr. Johnson Chukwu, FCA, the Group Managing Director and CEO of Cowrie Asset Management Limited. We want to say thank you so much for coming on the show today and for sharing your wealth of knowledge and experience with our members and student members on this show today. Thank you so much. We appreciate you, sir.
Thank you for having me, and thank you for all for listening.
Thank you so much. And we also hope that when next we call upon you, you hack into our call.
Absolutely. You can take that in mind.
Thank you very much and have a lovely evening, sir.
Thank you.
Yeah. Okay, our time is fast spent. Let's quickly take some announcements before we close the show today. Like we told you, ICANN on Air is back on Thursdays, effective today. So from today going forward, our program ICANN on Air will be run every Thursday by 6 p.m. So take note and do not forget. Tell your friends and other colleagues to join ICANN on Air. It is a platform for learning. And also, the Institute bids farewell to our departed, a council member, Ms. Joy Mban Esu FC, a council member of the Institute, and they are urging members or employee members who wish to send tributes to do that through the link that has been shared on the various platforms. We pray that God will continue to rest our soul. We also inform you that ICANN is live on TikTok. So follow us at ICANN.ng to get the very exclusive news, study tips, our events, behind the scenes content, student insight, and much more information on the TikTok. Also, as regards the 54th AAC that was just concluded, all the papers that were presented have been put together and hosted on ICANN website and also through the link that has been shared. Please visit ICANN website and get all the papers that were taken at the 54th AAC. The third ECOWAS Abwa Congress holds between November 27 and 30th, 2024 at Cote d'Ivoire. The theme is sustainability, integration, and West Africa's prosperity. See the flyers for details on how to register for the conference. So I'm glad to inform you that the 74th induction ceremony of the associate members holds between December 3rd and 4th, 2024. The induction fee is 130,000 naira, but application will close by November 15. So all qualified members should quickly go ahead and apply and register before the closing date. Also, we are glad to inform you that November 2024 diet professional examinations date has been announced. The date will be Tuesday, November 19 to Thursday, November 21st, 2024. And the payment will be closing by November 8th, while registration will close by November 15. All student members, please go ahead and register for your examinations. And you will agree with me that the show today has worth the while. Very educating, very enlightening, and very instructive. I want to say thank you all for being part of this show today. Till I come your way again with another guest, another topical issue, I encourage you to stay safe and stay sound. On behalf of the editorial team and the producers of ICANN on Air, Haribin Tosin Akiomi, FCA, saying thank you for watching and bye for now.